Step back and see the macro and digest it down to the micro. Trading, investing, and geopolitics. From macro down to the micro. Welcome to Macronomics.
Welcome back, guys, to Macronomics. Feeling a little good this morning. Just finished up some chess, some trades. I placed about 4 trades this morning. Today, guys, we're going to be talking about connecting the macro and the micro, the fundamental and the technical, if you will, of your trades. You know, it's kind of analogous to chess. You know, you got 2 aspects of chess. You got tactical and you got strategy. Strategy is the overarching plan of your plan, essentially. That's it, the overarching plan. And then you got the tactical, which is like the moves, like the setting up pieces, tactical moves, traps, trade-offs, etc. So, but the technical comes after the strategy. If you're just doing tactics without a strategy, you won't really get far because you have no overarching plan. And this, to me, I feel like is analogous to trading because you have fundamental and technical analysis, right? So the fundamental is the overarching plan. It's like what's happening in the environment. You know, what's happening with fiscal and monetary policy, what's happening with geopolitics, what's happening with social politics, all that good stuff, right? And then you got the technical, which is the trades, the charts, momentum and resistance, trend lines, cash flow and inflows and outflows and all the specifics. So you put those together, you have a powerful force. And so that's why I said it was analogous to chess, because when you look at trading and chess, it's the same concept. You got strategy and technical, and then with trading, you have fundamental and technical. Both concepts are similar. Overarching, you have the strategy, and then you execute with the technical. And that's where we're at today, guys. With today's episode, is connecting the macro to the micro. That's what this podcast is all about. So just now, and I'm gonna connect it with the trades that we placed. We placed about 4 trades. Today is Wednesday, and we got some news coming out of the Fed. Essentially, there's been some movement priced into. And when I say priced in, I mean like forecasted. That the Fed is going to increase another rate hike. And for anyone that doesn't know, I'm still in this too, learning, guys. This is interest rates, which affects the interest rates of banks. And you know what I've been trying to figure out is if it's the interest rate that the Fed charges banks or that the Fed charges the government. It's a lot of loopholes, but this is something we got to continue to build upon so that we can grow our perspective. So as we're planning our overarching plan, and then we get down to the technical, we're able to maneuver a lot better. So that news is coming out today. There's some news coming out of Australia, the CPI index. There's a lot of things being forecasted, but I decided to place a couple trades today primarily based around the macro environment of the dollar. There's been a slight pullback this morning on the DXY, and I decided, you know what, this is setting up on some of the charts. I believe I took a limit trade, which is I took a limit trade and 3 market orders. One of them, so I got into USD JPY just because of the macro environment. My bias is towards the upside, especially with the current environment we're in. And just because the Japanese policy seems to be a little distorted and not really sound. And when I say sound, I mean there's a lot of news out of Japan, but there's nothing tangible. And I don't know if that's like that for a reason, if they're trying to deploy something. But regardless, it's been very strong the past couple of months. So my bias is towards the upside. So I decided to hop into a position to the upside. And something I've been experimenting with that we can incorporate is I place half of the trade of what I was willing to get in for. And the reason being is if it actually shoots down to the support area that I was able to identify, I'll get back into the trade with a full amount. So I'm risking half now to potentially get up to the upside. And if it reaches down to the support area that we've located, then we'll go in for a full amount, thus limiting our risk. We're all about limiting our risk, guys, because the more you can limit your risk, the more you can stay in the game. So that's one of the trades. Again, this whole trade was based off the macro, though. This was based off the environment of what's happening with monetary policy now, some news coming out, the environment, and then we get into the technical, looking at the chart, USD JPY, identifying some support and resistance areas, some inflows, certain patterns that we're able to identify. Now, we're not trading off of the patterns, guys. We trade off of the macro, and then we identify through the technical. So we start off with the overarching view. What's the environment like? What's happening around the world? How do we connect these dots? And that's what I was saying. It's analogous to chess. You just start making moves on the board. Yes, you might win a couple of pieces, but you're not going to win the game, because eventually you get to a point where, see, if your pieces are not aligned, if you're not moving as a force, you're not going to win the game. You might have some nasty, amazing tactical moves, but that's not going to win you the game, because if you're not moving all of your pieces as a whole, you won't get far. And that's where the strategy comes in. The strategy is the main purpose of all the pieces. And then you get into the technical. And so that's I'm going to keep reiterating that, because that's the basis of today's episode. So that was one of our trades. We placed another trade with what trade would okay, so it was USD JPY, and it was another trade that we did the same concept with Euro, Great Britain pound. Yes, it was the Euro and the Great Britain. That's what it was. Euro, Great Britain pound, and Euro USD. We two sells, and again, just the same concept. I'm not going to get into the technical because I don't remember exactly where I got in, and I don't want to lose you guys. But it was based off of the macro, and then I seen some technicals that aligned with it, so I decided to put my chips in the middle of the table. So that is that's our concept for today. Those are the trades we placed, and I'm not gonna go too deep into it, because right now as we move forward, I'm trying to keep these episodes slight until we start bringing on some guests and we start diving into some more topics. A lot of these episodes is what I've been incorporating, just sharing with you guys what I've been doing. Not to tell you what to do, absolutely not, because that's not what this is about, guys. This is about sharing my experience of what worked for me and is working, and what's not working. It's a process, okay? It is an absolute process, and there is no one way. I'm learning that, especially with trading. It's 1,000 different ways. You look at people who are successful within the trading realm, and none of them trade the same. You got to find your lights. You got to find what works for you. Listening to people and learn from them is great, but you can't copy them, because they got to that point for a reason. And so that's all we're trying to do with macronomics. And so we're going to conclude today's episode with what we started with. Be aware of the environment. Identify discrepancies, if you will, within the environment, and then analyze the charts and align the two. If you're able to align the two, then you should be able to push the favor your way, because you're trading with the technical, and then you're aligned with the fundamental overview of what's going on. And that's why it's important to have those two lined up. And that chess analogy really just came to me, guys, because that really is what it is. Because when you have the two lined up, in chess specifically, the match I just played, my opponent, he I don't know if you guys know, for anyone who does play chess, I'm still learning some openings. I'm actually reading a book about chess openings, and I played the English Open, which I don't know too much about, but essentially this opening is associated with tricking your opponent, because the whole point is to open up the board and to have positional advantage in the center. And so I opened it up. I knew what I was doing, but see, my opponent, he was responding to what I was doing. So he played some tactical moves early on, and he got jumbled up. I ended up taking some of his pieces that were free, because he had a tactical move where he was trying to line up and do something fancy, but he didn't have any strategy. He didn't have any strategy, guys. And I know this because he was responding to what I was doing. So after I took his piece and exchanged it some other pieces, and then I was able to castle, he did the same thing, but he was only responding to what I was doing. And so the concept that we can extrapolate or connect as far as chess and trading is you got to have your strategy first, and then you implement the tactics. My opponent, he didn't have that, which is why he faltered and he lost, because he didn't have a strategy. Maybe he did have a strategy. Maybe because you can't always identify that looking from the opposite side of the board. But from what I could see, there was no strategy. There was just a lot of tacticalness going on. And so as we move forward and you place your trades, be aware of the macro environment. I'm not saying you have to study it, all these books or information and news outlets, but be aware. I love reading, guys, and I've actually been, like I talked to you guys about the other day or last week, or maybe it was the week before that, Currency Wars. Great book that essentially laid out the outline of how currencies are not manufactured, but manipulated to attack one another. By pushing down the price of one's currency, they can become more competitive, etc. SDRs. That being able to learn about that helped me to create and expand my perspective so that I can understand some of these macro drivers, if you will. And see, when you understand the macro drivers, then you can implement some of these tactical, not attacks, but tactical, or I guess in the term of trading, it'd be technical. You can implement some of these technical pieces into play. And so that's the whole basis of our episode today, guys. Connect the macro with the micro. Connect the fundamental to the technical. Connect the strategy to the tactical.